This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the Creating Wealth Show with Jason Hartman. You're about to learn a new slant on investing, some exciting techniques, and fresh new approaches to the world's most historically proven asset class that will enable you to create more wealth and freedom than you ever thought possible. Jason is a genuine self-made multimillionaire who's actually been there and done it. He's a successful investor, lender, developer, and entrepreneur who's owned properties in 11 states, had hundreds of tenants, and been involved in thousands of real estate transactions. This program will help you follow in Jason's footsteps on the road to your financial independence day. You really can do it. And now, here's your host, Jason Hartman, with the complete solution for real estate investors.
Welcome to episode 1922, and thank you for joining me today. We have our continuing conversation with Dr. Marc Faber, the contrarian, the shrewd Swiss investment advisor, and he'll be on in just a few minutes. But first, we've got to talk about a few things, and I want to start with the elephant in the room. What is the elephant in the room? No, it is not the recent erection. You know, I can't say the word or they'll cancel me because if you talk about what people in the US do when they go and pick people to run things, see how I'm dancing around the topic here? They go to that booth and they do that electronic machine that might be rigged or they punch those forms with the hanging chads, whatever it is, right? We can't even say it anymore because the thought police are out there. That is not the elephant in the room I'm going to talk about, but it is worthy of discussion, but we're not going to talk about it today. All right. And I cannot believe we don't have the results from so many races yet. It's absolutely shocking that they can't figure this out. But, you got to leave more time for fraud. If you don't have some extra time to commit the fraud, then, it'll put the fraudsters under too much pressure with these erections. Okay, this is a family-friendly show, by the way. But, yeah. Anyway, so Marc Faber will be with us in just a moment. But first, I want to talk about crypto, the elephant in the room. I know, I haven't really talked about it. But, folks, did I not tell you this kind of stuff was coming 10 years ago? I did. It's like the massive number of scandals. And I mean, look, they had scandals a long time ago too, so I guess it wasn't that hard to predict this stuff. But, Mount Gox, remember that one years and years ago? And there've been so many others. And look, I would love nothing more than to see a legitimate cryptocurrency, or maybe a bunch of them, take over the world. I think Bitcoin is really the only one that is kind of the real thing, right? All of the others are subject to central planners, if you will, because they're not decentralized. But what the crypto world needs, if it's going to be fixed, is not regulation as much as it needs DeFi, the decentralized protocol that is it's a hopeful, trustless system, right? It's not ready for prime time, clearly, but it's really interesting. If you haven't studied that at all, and again, I'm not some big crypto guy. We do have a show called The Crypto Cast, which, for the many years I was really doing a lot of episodes on that one. It almost ought to be called the Anti-Crypto Cast. I was going to literally change the name because there are just so many issues here. It's, and my position, by the way, on this has never, ever changed. I have been entirely consistent since That night on the beach at a cocktail party, when I met a guy who told me about Bitcoin and I had no clue what he was talking about. I was at a speaking engagement. They had a reception, a cocktail reception on a beach outside of the resort. And I remember standing on that beach and talking with a few people. And this one guy that said, "Have you heard of Bitcoin?" And I'm like, "No, what is that?" And he tried to explain it to me. And it was $74 back then, $74 a coin. And I said, "Well, is it real?" No, it's not real. It's not a physical thing. And, well, how do you get it? Why would you want it? I mean, I asked all the questions. And anyway, but my position has been entirely consistent, never changing. I hope it works, but I think there are so many powerful forces against it. The two most powerful entities ever in human history, governments and central banks, that will try to thwart it, that will engineer crises, that will engineer regulation, that will do whatever they can to stop it, because it is competing for their major product, which is their currency. If you have a country and your country is called the United States, your chief product is not liberty. No, it is currency. That is your product. Just like if you have a business that makes widgets, the widgets are your product. If you have a business that makes hamburgers, hamburgers are your product. The US government's product is dollars. The European Union's product is the euro, okay? Japan's product is the yen. These are the major products of any country are their currency. That is how they gain and maintain power and control over the people, is through the currency. It's an incredibly powerful tool. But we won't go down that rabbit hole. So popular YouTuber Meet Kevin, he tweeted 17 hours ago, he said, "I promoted FTX. I was wrong. I was an idiot. I effed up. I'm sorry," right? So he obviously, I'm sure he's had a ton of blame on this. And then he says, he has Sam Bankman, whatever the sloppy slob's name is, deserves to sit in prison next to Bernie Madoff. Well, Kevin, did you know that Bernie Madoff is not around anymore? F him, disgrace to crypto, right? And then, the next part of that tweet thread is, "I also promoted BlockFi," Meet Kevin says. "I lost $433,000 on them. I want to be super clear here. I'm devastated and extremely sorry. This sucks." And then, you just do a search for BlockFi and you see all the stuff that was in the news a while back about suspending the withdrawals and all this stuff. Folks, be really careful with this stuff. It's, I don't want to say like Warren Buffett or Charlie Munger said, but, financial weapons of mass destruction, right? Like derivatives, same idea. Okay. So anyway, but look, if Bitcoin would take over the world, I would be happy as a clam. I think it'd be great. I just don't think it's going to happen. I see the idealism of it. I get it. I think it's great. But I'm a realist. I'm a pragmatist. Okay. So yeah, we'll see. Okay. Now, this article was interesting. And before we get to Marc Faber, I just thought I'd share this with you. We've talked about this before. This is a constant question, argument, debate between people. Does money buy happiness? Does money buy happiness? Can you buy happiness with cold hard cash? Right? Well, this unusual experiment suggests that money can buy happiness unless you make $123,000 a year. So look, there's a lot of stuff here, but a couple points that I think are really, really important. And by the way, I see the happiness pulling up in front of my house. That is the delivery truck that comes and drops off all the stuff I like to buy all the time. And the dog's probably going to be barking in a moment. So we may have to pause this recording. But here's a couple of takeaways on this money can buy happiness or it can't buy happiness debate. Look, when you don't have something, you really want it. And if you get some of it, it's going to make you happy. Now, it could be money, it could be other things that we all need. We all have human needs, right? I'm not going to say any words because I'm already in trouble for what I said at the beginning about that, thing people do occasionally in the U.S. when they try to pick their leaders. It starts with a V and ends with a E, right? And it's a 4-letter word, and so I'm not going to say anything about it. But when you don't have something, you tend to want it more, right? But once you get a reasonable amount of it, the amount you need to survive or feel satiated, right? Whether it's food or money or whatever, then it just, after that, is unnecessary. And it just becomes a game, a challenge, a way of keeping score. And look, challenges are good because they lead to growth, and growth is good because when we stretch ourselves to do more than we thought we could before, or earn more than we thought we could. I mean, look, when we were all teenagers, right? And I know some of you are because we have some teenage listeners, but when we were all teenagers, we thought a much smaller amount of money would be incredible. We could buy a sports car or, whatever, right? Some minor things. But as adults, as we got older, we needed a much larger amount of money for it to matter, right? But then, I know a lot of our listeners are wealthy people. And after a certain point, the money just becomes really a game. It becomes a challenge. It becomes a contest. And you know what? There's nothing wrong with that. In fact, I think that's super healthy as long as it doesn't run you to the cost of other things, right? So we've all got to find our point of balance there and just understand that. But here's the other big takeaway. And this is something that is really, really important about money. And that is that people who don't have money lack the ability to give. And giving, whether you think that's healthy or unhealthy, if you're an Ayn Rand follower, and I think Ayn Rand was brilliant, she really, wrote a lot of brilliant things, no question. I certainly don't agree with her on everything, but, I have taken objectivism classes a long time ago at the Ayn Rand Institute when I lived in Southern California. It was right there in Irvine near my office. And, I've followed her work for a couple of decades now, or actually longer, a few decades. And she's brilliant, right? And a lot of the lyrics of Rush songs, the most talented band to ever walk the face of the earth, are from, they're inspired by Ayn Rand's writings, right? But Ayn Rand would say, no, don't give, be selfish, yada, yada. But a lot of that stuff is very misconstrued about her writings. And, we've had the head of the Ayn Rand Institute on the show before. And, I know you all said that was a great interview. If you didn't hear it, if you're a newer listener, be sure to go to jasonhartman.com and use the search engine there. And be sure to listen to the back catalog of, the last 1900 and something episodes. There's a lot of really good stuff there. In fact, I used to be better at this than I am today. So some of those old interviews are really, they're just fantastic, and they're not timely, right? But that's why we do Flashback Friday, and that's why you should make sure you listen to every Flashback Friday episode, because if you don't have a sense of history, wow, you're really going to have a lot of blind spots, okay? But the ability to give is a big deal. And that's one of the major reasons to earn money. Now, I haven't done a lot with it yet, but when I sold my last company back in 2005, I immediately, right after the sale, I set up the Jason Hartman Foundation, okay? And I don't accept any donations. No one's ever given that foundation a penny except yours truly. It's just my money that I earn, that I put into the foundation to, do some charity stuff. And I haven't done much of anything with it. I've just never had time. But it's there and it can be used in the future. And, the foundation, that'll probably be what occupies my retirement years if I ever really retire, which I probably never will. But, I'll probably get a little more life balance at some point and really make the foundation like my major mission, right? It certainly hasn't been. It's always been on the sidelines. I haven't done much with it at all. But the fact that I set it up and the fact that I do give a little bit every year, because you have to give 5% every year, right, of the foundation's money, just sort of institutionalizes it in my life, even though, 17 years later, I really haven't done much with it at all. But it's there, I put some money into it, and I keep putting more money into it, and we'll eventually turn that into something great, I'm sure. So the ability to give. But just remember one other thing about money. Nothing works as well as money in the area or areas, plural, that money works. Money is without competition in its fields, right? In the areas where money works, simply nothing works like it. Nothing works better than money. So it is incredibly important. And can it buy happiness? Well, if you make less than $123,000 a year, the answer is yes. If you make more than that, the answer is maybe. It depends. It depends how you use it. But I would also say generally, and I'm sure you've heard this and thought it, and I'm thinking it a lot lately too, kind of what's the point after a while, right? What's the point? You earn all this money. I live a fairly modest life and always have, given the amount of money I have. There's always a big surplus, pretty much every year for me. And, I'm kind of, as the years go on, I'm kind of thinking like, I got to start enjoying this money or I'm an idiot. I got to start enjoying it more, like make it a real point, a real mission to do more with it and not to have a lot more stuff, but to have a lot more experiences and higher quality experiences. For example, there are companies that do these private world journeys, right? Not cruises. There are certainly world cruises that you can go on where you can be on a cruise ship, a luxury cruise ship, and go all around the world. And that's, I'm sure incredible. But this is airplane trips. And in about 20 days to 30 days, you can go all around the world in a commercial plane that is outfitted for private use and only has, it's 100% first class, the whole plane. There's no economy class. And, Four Seasons, the Rob Report, some other companies sort of white label this. And you can fly around the world in this big jet with like, I think 77 passengers it holds or something. It's a big jet, but it's really spacious, right? It's, there aren't that many seats. They could cram a lot more in there, but it's 100% first class. And, you just have a totally first class trip all around the world to all of these major destinations. And it's about 150 grand to do that per person, right? So, if you made a bunch of money and you're following my refi till you die plan and, you've got your bases covered, why not do something like that extravagant, once a year? Maybe you and your significant other, it's $300,000. So you drop $300,000. Big deal, right? You've got the money, spend some of it, right? So there's all kinds of opportunities like that to use your money and really have experiences that build really lasting memories and enrich your life. Okay, in our Empowered Investor Pro group, one of our members posted this, Patrick did, so thank you for posting that. And this chart is on the screen, by the way. If you're not watching on video, I try to just explain things to you for audio only listeners. But all this stuff does make it to my YouTube channel, so be sure to go look there. And we're also on the alternative platforms where there is no censorship. So check those out too, Rumble and BitChute and Odyssey and so forth. Okay, so U.S. mortgage-free home share. In other words, in these major areas that are listed on this chart, this is the number of homes that are free and clear, that have no mortgage, that are paid off. And this is a Bloomberg piece, okay? And the source is from Adam Data, and we've had them on the show many times over the years. And what this shows you is what I've been talking about a lot, is that if you want to have a real estate crash, which I know many people are waiting for, holding their breath, hoping for, whatever, morbidly want to see it, maybe they want to say, see, I told you so, I was smart to wait. I missed out on the boom over the last 12 years, but I've been waiting 12 years, and because I always thought it was going to crash, and so I didn't buy anything, and I didn't invest, and now I'm finally going to be right. Yeah, good luck. I don't even know if you're going to be right now. And even if you are right in terms of prices softening, which you probably will be right about that, okay, you're not going to be right in terms of the yield you lost. And you're not going to be right in terms of, or I should say they, I mean, all of you listening are going to be right because you know better, right? But they are not going to be right because they're going to miss out on the yield. They're going to miss out on the tax benefits, and they're going to put their money into something else, like a bank account that's being ravaged by inflation, or a stock market that is a disaster, or the crypto market that is a bigger disaster, right? So it's all about TINA, T-I-N-A. There is no alternative. You just have to pick the best available alternative. That's all any of us can do. So paid off homes. Palm Beach, Florida, where I live, right? Number one, there are 567,000 homes in Palm Beach, Florida, and 236,000 of them, or 41.5%, are paid off free and clear, no mortgage. Where are all the distressed homeowners? Broward County, just south of me, that's basically Fort Lauderdale area, okay? 624,000 homes, 223,000 are paid off free and clear. That's 36% of all the homes there. In Cook County, Illinois, right? The corrupt Cook County, we hear about it all the time. You got about almost, I'm going to round off for speed here, okay? You got about 1.4 million homes, and about 400,000 are all paid off free and clear, about 30%, okay? Bexar, Texas, Clark County, Nevada, where Las Vegas is, okay? Las Vegas, 692,000 homes, 193,000 of them paid off free and clear. That's 28% of them paid off. In Dallas, 25% of the homes are paid off. In Maricopa County, Phoenix, right? 24.1% paid off free and clear. Riverside, California, 19.5% paid off free and clear. Orange County, where I'm from, where I used to live, 16% paid off free and clear. LA County, where I grew up, 16% paid off free and clear. San Diego, where I used to live, 15.7% paid off free and clear. Let's just jump up to Washington State for a moment. King County, 15.5% paid off free and clear. Okay, now those are the free and clear homes. We know that 40% of the homes in the entire country are paid off free and clear, okay, overall. And we know that 25% have mortgages below 3%, and 65% have mortgages below 4%. Don't hold your breath for that crash, folks, because you got to have distressed homeowners. But speaking of distress, and we'll get to Marc Faber here in a second, look at this chart of one-year stock performance for Compass, the real estate company, Opendoor, the iBuyer real estate company, Zillow, the iBuyer and data company, and Redfin. I mean, this is shockingly bad. The stock of Compass is down 82%. The stock of Opendoor is down 90%. The stock of Zillow in 1 year is down 69%. Redfin down 92%. I mean, the real estate industry, in the midst of a massive financial reckoning, public company valuations down by billions, widespread layoffs, a rush for venture-funded disruptors to conserve cash and demonstrate sustainable business models. Folks, as I've always said, real businesses make profits. My humble little companies, they actually make freaking money. Okay. They're not like these Wall Street scams that are propped up by a house of cards. I mean, every year my businesses are solvent. Okay. They make money. But, all the founders of these companies or the execs, they've all skimmed millions and millions of dollars off the top and they just burn the shareholders. That's what happens with all of these companies. It's a scam. Wall Street is the modern version of organized crime. Okay, inventory, I know we got to go, but inventory actually declined last week by 6,000 homes. It was up a little bit the week before, but now it declined again. 571,000 homes unsold, inventory down in the country, and it's about half of normal right now. Half of normal. Get your tickets for our upcoming event in Scottsdale, Arizona, end of January. Go to jasonhartman.com, or you can go direct to empoweredinvestor.com/live, empoweredinvestor.com/live, and get your tickets today. And let's get to the second half of our discussion with Marc Faber.
For every investor, this is a big question. First of all, if the governments could lock you in, the governments can also take your money away. That people have to realize. They may not do it, but they can do it.
Yep.
First of all, someone says, oh, I have my house, I'm safe. No, they can tax it away.
Yep. Nothing is safe. They can do whatever they want. No asset is safe. Yeah.
No asset is safe. So if you want to live safely and peacefully, you have to have different assets in different sovereign states, in different jurisdictions. Right. You have some maybe. Well, I say there are two worlds. One world is the Anglo-Saxon world of Canada, the US, Britain, and Australia. These are the insane people. The same people, they live in Africa and in Latin America and in Asia and so forth. They are relatively neutral, you understand?
Isn't that funny? Because the Anglo world that you mentioned thinks South America is so corrupt. And, that's just a constant thing, the corruption, the inflation, the political instability, switching back and forth from dictatorships to democracies. But you view that the opposite.
I live in what people say is a corrupt country.
Yeah.
I don't have a lot to do with the government, but we own land. And we have to go to government offices for the land certificates and this and that.
And you're in Thailand, just to be clear,
yes,
right?
We have never encountered directly corruption.
Mm-hmm.
But everybody says there's corruption, but I haven't encountered it. The corruption is a lot. If you choose to give money to someone, it's your choice. You don't have to in all cases. You can facilitate with money things.
Right.
And, with the vaccine story and this and that, and with the defense industry, there's big money flowing.
Sure.
The US government spends $4 trillion a year, okay? That's the government expenditures in the US. They collect tax about 3 trillion. The 4 trillion, if the country is very honest, 5% will be stolen. Mm-hmm. But this is the most honest country in the world, like Norway, Switzerland, right. The Netherlands, Sweden, Finland. In America, what is stolen is probably 10, 20%. In Africa, 90% is stolen.
Mm-hmm. Yeah. Very interesting. So let's talk about Europe for a minute, if we can. What are your thoughts about the euro as a currency and the European Union in general? Can it stay together? Can that whole system hold? It seems like it's very unstable.
This is a very interesting question, and I want to answer it the following way. When they started this whole expedition against Ukraine in February, Mr. Biden, he proclaimed that NATO had never been as strong as it is now. This is wrong. We have huge demonstrations in Europe. because people say, why do we give so much money to Ukraine and we have nothing? We don't have enough to eat. You understand? The pensioners in Europe, they're mad as hell because the pensions don't go up a lot, but the cost of living are going up a lot, more than 10% per annum.
Sure.
So, I mean, people have to
higher
cut
in some
back
places
on shopping. And the income of retirees and people in Germany is relatively low, say, compared to the US and compared to Switzerland. And so now you have in all these countries, European countries, very strong opposition parties who say, why do we do this? Are we fighting a war for the US? The US benefits. The US sells now oil and natural gas to Europe. Before they could get it cheap from Russia, now they buy it from the US expensively. I mean, people are dumb, that no doubt. And about subjects I don't study, I'm also not very familiar. But people wake up and, you know, there are lots of voices. The media doesn't tell the people the truth. But because of that, nobody trusts the media and they go to other sites and so forth. They listen to programs like yours and they realize, well, the big loser in this whole conflict is Western Europe. It's as if some people in America wanted to destroy Western Europe.
That's a very interesting take. Any comments on the Soros organization when you say that?
I don't need to give you any comments. It's obvious.
Yeah. Okay.
It's out to destroy, you know, the country where he made all his money.
Yeah.
He's not a nice man. He's very intelligent. He's very bright, academically brilliant. I met him a few times. Very smart, but not nice.
Yeah.
And I don't know why he's doing it, but it has to do with Israel, in my opinion.
Yeah.
Or his view of the role of Jews in the world. That is clear to me. But if you say it, you're an anti-Semite. So, but because I'm already a racist, I can also be an anti-Semite now.
Be careful of the woke mob.
Yes, absolutely.
Yeah, absolutely.
But it's obvious. He's doing something that is destructive. I want to tell you, I know this case very well because I know the leader of the Hong Kong student demonstrations, okay? The Hong Kong student demonstrations occurred.
I was there, by the way. Literally, I left Hong Kong the week before that started.
Yes.
I mean, just incredible timing, you know. But
yes, but anyway, the point is, this was organized and financed by American NGOs, 100%.
Yeah.
And what is the result? And the result was predictable because, look, China is a country with 1.3 billion people. Do you think they're going to let Hong Kong just say, walk out of the China Union?
Yeah, of course not.
Of course not.
Yeah.
And what then happened is China stamped down on these demonstrations. And in order to prevent this from happening again, ever, they introduced very tough security laws. I mean, my friend, he's a wealthy businessman. He was supporting the demonstrators. He's going to go to jail for a long time.
Wow.
He's 74 years old. It's not so pleasant at that age to be in jail. And, you know, there's not in Switzerland, the jail is like a luxury pension.
Yeah.
You can choose your meals and this and that. You have heating, you have whatever. Not in Hong Kong.
Yeah, right. Yeah, not in China for sure. Talk to us about, you know, one of the things that may have surprised some people, and by the way, some of these questions are from one of our listeners, Manny Kim at Giza Capital, a hedge fund that he runs, and he asked me to ask you about dollar strength versus other currencies. It's just sort of an interesting dynamic. We have this seriously high inflation in the U.S., worse in Europe, in many places in Europe, right? Yet the dollar is showing so much strength versus other currencies.
Yes, but open the Bloomberg page with bonds, WB, go. You can see the yield on the 10 years US Treasury is over 4%.
Right.
On the Swiss franc bond, it's next to zero. In Japan, the 10 years is at one. They pegged it. They manipulated at 1.25%. So if you're an institution, you manage billions of dollars, or your sovereign wealth fund,
you're going to put it into dollars.
To yourself, well, do I want to invest my billion cash in euros? And then you look at von der Leyen, and you look at Baerbock, and you look at Lagarde at the ECB, or do I want to invest it in the US?
No. The US
the US, yeah, I mean, I think the US dollar is grossly overvalued.
No.
But it doesn't mean that because it's grossly overvalued, it will tumble right away. It was grossly overvalued throughout the 60s, but it took until 71 to really drop. But once it will drop a lot. That I'm sure.
But compared to what is always the question. So when you compare that to the other currencies, will the dollar still outperform? Will the US still hold that sort of Brinks truck status?
Yes, this is possible, but I would argue there are some currencies like the Singapore dollar, which is likely to outperform the US. And this year we have Russia that has outperformed the US, and Brazil, the currency.
Yeah, the real.
And the Singapore dollar has been steady, and Mexico peso has been steady. My sense is the dollar will go down one day significantly. But if you think it through, what is the strongest currency fundamentally? Is the currency that you cannot increase the supply much. So you have to look at platinum, gold, silver.
Right.
These are the three currencies you cannot increase the supply very much. That's what I would own if I were bearish on the dollar. I'm bearish on the dollar, and so I own the precious metals.
Yeah.
I prefer precious metals to the euro.
I have never heard you talk about, and I'm sure you have talked about it, but I just have missed it. Bitcoin. What are your thoughts?
Well, I owned before Bitcoin and so forth. I'm not terribly interested.
Yeah.
There are some advantages with Bitcoins, which you don't have with gold.
Right. Portability.
But nowadays they have gold companies where you can buy gold, say in Hong Kong. You can then get it out in London.
Right.
But in a world war, who knows?
Yeah, right. That may just be another fiat, that's essentially a fiat currency.
But in a world war, you want to be there where you want to be. You understand? You don't want to enter World War III and then say, well, after 3 months, I'm going to travel. Because most likely you won't be able to travel safely.
Right.
That's gone out.
Right.
And like I'm not wildly bullish about Thailand, but I have money in Thailand for the simple reason that maybe one day I can't remit money to Thailand.
Right.
So I want to have at least enough money to buy my whiskey and the beer, go out for my dinners and nightclubs.
Right. You need to have your money somewhat close to you.
I said that we have no money left.
Yeah, totally understand. Well, Marc, anything you'd like to say before we wrap it up? Any advice you have to our listeners? It's such a pleasure to have you on again.
Well, but I think if you look at the action of central banks, you just said we had this huge increase in interest rates. Yes, it's an unprecedented rise. in a very short period of time. I mean, the long bond, if you look at the TLT, the bond ETF, long bond ETF, it's dropped from 170 to now, today it went down to 92, now it's 96. You understand?
Okay.
Never before has the bond market been this weak as we enter a recession. Normally in recessions, the bond market rallies. This time around, if you were a financial advisor and long, and you were a wealthy man, you own stocks and bonds, both, and both went down. Never happened to me before that both went down. Not in the 70s, not in the 82 recession, not in the 1991 recession, and not in 2000, and not in 2007, 8, 2008, 2009. Treasury bonds rallied very strongly.
So what's the action step there? What does that mean to people?
It means, since you're essentially concerned about wealth preservation and wealth building,
right?
If you think it through, we live in a world and we have a price level. Your household has a net value of $3 million. Your neighbor has $5 million. Nancy Pelosi down the road, she has 100 million.
Nancy Pelosi is the world's best investor.
Yes, and she has nice visitors that hammer the husband.
They bring hammers,
in,
yes.
In underwear.
Yeah.
Very strange to have a thief break into your house in underwear.
And where was her security? That story is just becoming more and more suspicious every day.
Of course, everybody laughs about the story. Everybody knows it's a big lie.
Yeah.
Something is very fishy. But anyway,
it's very fishy.
The point I want to make is, so you have the $3 million and everybody else around you has a certain amount of wealth.
Right.
Now, assuming we have money printing and everything goes up, and you go from 3 million to say 6 million,
right,
and everybody else goes also up by 100%. So everybody is the same as before.
Right.
It doesn't happen that way. Someone will become richer and someone less.
Oh, of course, because people are connected and own assets and don't own assets.
But another situation is when everything goes down.
Yeah.
If you are down, say you have 3 million, you lose 300,000, 10%. Your neighbor who has 5 million, he loses 50% because he was in meme stocks.
Right.
And in unicorns and the SPACs garbage. And he invested in things like all these gurus were telling their investors on Reddit.
Yep.
And Pelosi, she drops by 80%. Then your wealth has relatively increased. You understand?
Absolutely. Yeah. That's what I always say.
Now,
Economics
Pelosi,
is a relative
will not go
game.
down by 80% because she gets the inside information.
Sure. Yeah. Which is.
But you understand? So we could go down, but if we and your listeners only drop 10% and everybody else drops 25%, a balanced portfolio this year in the US is down 25%. Balance stocks and bonds.
Mm-hmm. Yeah. There's a great Twitter feed. I just want to mention it because you keep mentioning Pelosi. I think it's called Nancy Tracker, and it tracks all of her investments and how she manages to get returns of like 69% annually. It's amazing. And of course, Twitter, well, the old Twitter at least, canceled that account and it reappeared again under a slightly different name. Yeah, it's just the corruption is disgusting. It really is. It really is. Marc, do you want to give out a website or a Twitter handle or anything?
Well, I have the website gloomboomdoom.com, all in one word, gloomboomdoom.com.
Right.
And the website, I don't know, is Marc Faber, I guess, or Gloom Boom, or yeah. I don't know. But I have a Twitter account. We send out Twitter messages once a month when I publish the report.
Good stuff. Well, thank you for joining us. It's always great to talk to you, and
Nice
keep in
talking to
touch.
you.
Okay, be well.
And I wish you and your viewers a wonderful festive season. And if we don't talk before, Merry Christmas.
Thank you, Mark, and Merry Christmas to you.
Thank you. Bye-bye.
So George Gammon, Jason Hartman, and we've created a high-level mastermind group called The Collective. The goal of The Collective is for you to learn from the three of us, as well as, of course, the other members, on how to build and, more importantly, how to maintain your wealth. In this video, we're going to go into detail about what The Collective is and what it can do for you. Enjoy. So I'm Ken McElroy. I've been in real estate for over 30 years. Started with a 2-bedroom, 2-bath using my own money, and now I own over $1 billion worth of real estate that I bought over the years, built a big company. We have a construction company, a development company, a property management company, and of course an investment company. And typically now we syndicate and work with large, both private and public institutions for the equity and the debt. And so what I bring to The Collective is how to scale, how to grow, starting with one really small property with no experience at all and growing it into an organization, which I've been able to do that basically runs almost without me. So that's what I'm going to bring to The Collective. We decided to start The Collective because, one, I met George Gammon, and George brings a very interesting perspective about the economy and the Fed and the way money works and Bitcoin and alternative types of investments, which quite honestly, I was super focused on real estate almost the entire time. And even I want to be a little bit more diverse. So when I talk to George and to Jason, they're always doing very, very different things on the investment side. Jason specifically is more focused on the single family housing and what's going on in that market so that we could collaborate and have different viewpoints on different things. And so that's why I thought The Collective would be good, because I think everybody's kind of searching for the same kinds of answers. So The Collective means to me, basically, the collective group, the whole. And I've always been a big believer of team and collaboration. So for me, it really means collaboration, of everyone kind of coming into a room and learning from each other based on their individual highs and their individual lows, and to be very, very respectful of all their independent views on things, and to be more open-minded, transparent, and authentic. So I cannot wait for the group to get together each and every quarter, because we all have very different walks of life that we're going through, and so it's very, very cool to get into one room with like-minded people. I think the right person for The Collective is somebody who's into personal development, somebody who's trying to be a better individual, somebody who's trying to have that work-life balance, trying to figure out good decision-making on the investment side specifically, good decision-making on the personal side perhaps, certainly on their health and on their wealth. The members that have already signed up are people typically that have businesses that they're growing, businesses that they've started, or businesses that they've sold. So typically they're higher net worth, and they're trying to figure out what to do with their money. They're probably a little bit afraid of inflation. They're probably a little bit concerned about where to invest. And they're obviously looking at real estate as one component, somebody that's trying to do the right things both on the personal side and on the financial side. So some of the experiences that members can expect to get out of The Collective are certainly the network. And I think that's always super powerful. I've been involved in groups like this before, like EO and YPO, the Entrepreneurs Organization, and YPO, which is Young Presidents Organization, which is kind of a peer-to-peer network. And that's what I envisioned, and I think people are gonna certainly get that out of there. They're gonna have lifelong friends for sure from this, and they're gonna meet people at every single event. But also, we're gonna have fun. So as an example, things like race car driving and doing all kinds of really cool things and meeting celebrities and things like that, and fashion shows are gonna be part of it. So it's kind of how do we have fun and learn together, and we're gonna have that at each and every event. So thanks for watching. If you guys are interested, there's a link below you can click on. It'll take you right to the website, which has a load of information on exactly what The Collective is, where the next events are, and what exactly you'll be getting if you become a member. Thanks for watching.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.